Good evening. This is Dwayne Lowry with the DPP Grain Desk with the Sunday night outlook on Sunday, September 25th. You know, there's a lot of things we could talk about tonight, and probably far more time than I should put into a short Sunday night video. And I'm going to try to keep it relatively short. But there's a few things that need to be discussed. First of all, markets had a devastating week last week, and it wasn't only the grains. Crude oil took a nosedive, gold, stock index, commodities in general, everything hit the skids, and we find ourselves at by Friday's close at East Corn's $1.40 off of the late August highs. It's in the lower 30% of the range from April through September. If you took that entire trading range, we're in the bottom 30% of that range. November beans down $2.15 from the late August high. That's the lowest price seen for new crop beans since March. So it wipes away all of the summer and the acreage and the drought and the floods and everything else. All of that's been wiped out. December wheat's at the lowest, traded the lowest levels late last week that it has since July of 2010. Now, a lot of this has to do with broad commodity liquidation sell-off associated with European concerns, stock market concerns, just general economic concerns. There's been a large unwinding of bearish dollar positions, which were translated into bullish commodity positions for the last couple of years. So that's led to just a broad-based, huge margin call in the commodity world. And the grains have been caught in the crosshairs of that. There is still an argument that the fundamental foundation on the grain market is supportive, bullish, however you want to look at it. There's still a lot of debate about yields. But as we've talked about and warned of over the last few months, there were other conditions that were going to be equally and possibly more important to the grain trade than day-to-day fundamentals or yields, and that has proven to have been the case. We've been caught in an equity slide, and the question now is it over? Are we done liquidating some of these markets? Are we done? And if we're not done liquidating the markets, have we accomplished enough in the grains where the raw fundamentals that are seen as still perceived as being supportive, is it cheap enough? That's a big question. I'm not sure I know the answer to it, but it's something that we've got to look at and try to determine here over the next few weeks. The producer is not selling anything on this break. Some of them did a good job of making sales on strength price rallies throughout the summer. Others have been slow to the draw based on crop concerns, etc. The question now is, if we get some short-term recovery, is that a selling opportunity or not? As far as tonight is concerned, the weather looks like we got pretty much clear harvest weather through the next 2 weeks for most of the Midwest. The northeastern part of the Midwest will be the most likely to receive rains and should be relatively light. The U.S. hard red winter wheat crop still has moisture concerns in at least half of the belt, and really no measurable rain foreseen for the next 2 weeks, and so wheat weather will be supportive here tonight. The outside markets look to me like we probably got the worst of the panic over there. The weekend news stories and comments out of the European situation and the debt crisis appears to be somewhat encouraging, as in at least most participants there are beginning to realize that they need to take on a more stimulative type of approach, and Greece says they're going to honor their debt. But this week there are some key votes taking place in Greece that will determine whether they're able to get their next tranche of bailout money. So we'll have to wait and see. But I think the outside market should stabilize and be less of a negative influence on the grain trade this week. The corn market suffered a lot of liquidation pressure. It was very thorough by the time we got to Friday's close. So I think that we probably peaked out the selling energy there for a while. Corn market is due for some corrective bounce. And if that is true, to be able to rally 40, 50 cents from current levels wouldn't be that difficult. The question then becomes, what do we do with it? Is that a selling opportunity if you're a producer, or do you just put it in the bin and wait and hope and expect some sort of a price strength during the winter and early spring on an acreage battle for next year? I would be somewhat careful of that because the world supply situation is improving, and we got plentiful wheat supplies, etc. And I'd be a little bit cautious of that. And you still have the overall economic situation that could be a drag on rally potential for several months into the future. But for the time being, I think that we should expect some sort of price stabilization here in corn, a corrective rally that takes these corn futures back to somewhere between 680 and 710, for instance. I think at that point in time, the producer is going to have to do some soul searching and determine whether some sales and price protection strategies are in order. At the present time, I would certainly suggest that a guy mentally prepare for the possibility that he may need to make some sales on such an event. The November beans trading the lowest we've had since March. Technical conditions are extremely oversold. If the outside market pressure is over for the time being, which I'm hopeful that it is, we certainly are due for a corrective bounce in the beans. To be able to rally 75 cents from current levels is not an unreasonable prediction, but at the same time, what is one supposed to do with that? Do we have to make sales? Do we look forward to South American problems? How does the market handle that? I'm not sure, but here again, the guy may want to take some price protective measures on a notable rebound, which I think we are set up for. As far as wheat is concerned, after trading to the lowest level since July 2010, we have made some downside targets here. The market is very oversold. The spec community is heavily short wheat and more short wheat than they should be. The intermarket spread crowd has been using wheat as a short leg, and it looks like that's time for that to turn. And you've got weather concerns in the U.S. for dryness in the hard red winter wheat areas. So wheat looks like it should be able to stage some sort of a recovery. It found an ability to get independent strength on Friday, and I think we'll see follow-through strength here develop here early this week. So as far as tonight is concerned, look for corn and beans to possibly trade on both sides. I wouldn't rule that out, but I think it's going to be difficult to build additional downside energy, and I think overall things are due for a short covering rally that lasts more than just a few days or more than just a week. So look for some recovery and if some inability to build any downside follow-through momentum from Friday. For the DPP Grain Desk, this is Dwayne Lowry. Thank you.